Good morning, traders. Here's your market briefing for today, covering the US dollar index, WTI crude oil, gold, and dollar yen. So, starting with the dollar index slipped below 97.7 on Tuesday, extending its retreat from the 4 week high of 99 reached last week. And traders are reassessing the impact of US trade developments on the Fed Reserve's policy outlook. Treasury Secretary Bessent emphasized that the quality of trade deals outweighs timing, hinting that no major agreements are expected in the next 2 weeks, potentially paving the way for aggressive tariffs to begin in early August. He also signaled that the tariff truce with China will likely be extended past August 12th expiry to avoid disruption. And meanwhile, Fed officials appeared divided, with many viewing tariffs as inflationary and therefore a reason to delay rate cuts. Among major currencies, the Japanese yen gained as Prime Minister Ishiba is expected to remain in office, easing some political uncertainty. And technically, the dollar index broke below the key 97.8 to 98 support zone after stalling at the 99 resistance. Momentum has weakened, with RSI near neutral and MACD softening. The index may consolidate unless a fresh catalyst emerges, and key support lies at 97, with a break exposing 96.67. Resistance remain at 98, followed by the 50-day moving average at 98.58. Next, moving to WTI crude oil. The oil traded near 65.3 on Tuesday, easing slightly after Monday's modest decline. The markets looked off the latest EU sanctions on Russian oil, expecting little disruption to overall supply. But still, the fears of tightening diesel supply helped to limit the losses. Kremlin spokesman Dmitry Peskov noted Russia's growing resilience to sanctions, but traders remain worried ahead of US tariffs set to kick in against EU goods on August 1st. And for now, crude prices remain in a holding pattern, reflecting the tug of war between tightening supply and uncertain demand. On the chart, WTI is consolidating between the 89-day moving average at 64.9 and the 200-day moving average at 67.81. The momentum indicators are mixed, where the RSI is neutral and MACD is narrowing, suggesting an indecision. A breakout above 67.81 could retest 68.36 and potentially to the 70 psychological level. And the support remains at 64.9 with a break below exposing to 64. Now we talk about spot gold. Gold surged past 34.30 overnight, marking its highest level since mid-June, as US yields and the dollar weakened amid renewed trade uncertainty. With the August 1st tariff deadline approaching, fears are rising that no US and EU deal will be reached. The EU diplomats are reportedly preparing retaliatory measures in case Trump imposes a 30% tariff. And meanwhile, Treasury Secretary Bessent hinted at extending China tariff talks and mentioned other trade deals, though no specifics were given. The ECB is expected to keep rates on hold at 2% this week, while the Fed meets next week. On the technical front, gold is forming a symmetrical triangle on the daily chart, reflecting consolidation between rising and falling trend lines. The narrowing Bollinger Bands points to reduced volatility, often a prelude to a breakout. And RSI sits at 64, signaling a moderately bullish momentum. The support is at 33.75 and 32.24.8, while the resistance sits at 34.52.7 and the record height of 3500. A break from this triangle will likely signal the start of a new trend. And last but not least, the dollar yen. The dollar yen found support near 146.5 on Tuesday as the yen weakened slightly amid ongoing political concerns in Japan. Prime Minister Ishiba remains in office despite projections showing his party may lose control of the upper house in Sunday's election. The market focus is now shifting to US Japan trade talks, with negotiation aiming for a deal before August 1st. The signs of renewed political risk or trade tension could weigh further on the yen. And technically, the pair failed to break above resistance at 148.65 to 149 and is now testing the 147.08 support zone. A drop below 146.5 to 146.4 could trigger a move toward 146 or even lower to 145. However, with RSI still above 50, bullish momentum hasn't fully faded. To push higher, bulls must reclaim 149 and the 200-day moving average at 149.68 to set up a challenge of the 150 level. So that's all for today's market briefing. Thanks for tuning in. Trade smart and stay informed.